Here we have the current stock market update for Broadcom Incorporated, stock ticker AVGO. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons so that other traders will be able to find this information more easily on the platform. So here we can see that the share price itself is starting to roll over after reaching some very critical Fibonacci levels. So in the rest of this video, I will be looking at some of these key price zones here and identify some of the near-term event risks that are most likely to influence this stock going forward so that we can engage in and construct some profitable trading strategies for Broadcom. So as things currently stand, as you can see, the near-term high comes in at 172.42. And this is quite a critical resistance zone because, as I mentioned in prior videos, and I left this resistance zone in place on this chart. I did not change any of the chart markings here. But as we can see here, this price failure, it's near term and it's somewhat small in size, but currently what we're seeing here is some downside price movement after reaching resistance at a very critical Fibonacci retracement zone. So essentially what I'm talking about here is the 786 retracement of this major declining price move, which currently comes in just above the 173 mark. So we didn't reach this level exactly, but we're within roughly 50 or 60 cents of this area. So I do find it quite interesting that the share price itself was not able to overcome this resistance zone, and now we're starting to see price movements lower. So if this continues and we see, for example, lower close on the week, this would be very critical for this stock because 172.42 would become a major point of resistance going forward. So to arrive at this number, I'll just explain how I arrived at this figure. So essentially, what we're doing here is we're looking at the prior price high, which came in during the June 18 trading session, which posted at 185.16. And as we can see here, the share price itself did take a fairly dramatic move lower. And we did see share prices move all the way down to 128.50 during the August 5 trading session. This level was significant because essentially what happened here is we broke the prior main support zone, which came in at 130.25. So this was a very dramatic move lower. But we did actually see a bit of a false breakout to the downside here, given the fact that there really wasn't any follow through after breaking through this 130.25 level. So as things currently stand, this is the main price move that I'm watching. I do believe this declining trend move here to be the dominant force, so to speak, in governing price action at the moment. I do think that this is the most relevant and influential price movement here. So what I'm looking at currently, is this recovery that came from 128.50 and then this eventual failure here right around this 173 mark, 172, 173. So as we can see here, this does match with the 78.6% Fibonacci retracement zone quite closely. I don't think that this is something that can just be ignored. So, we have seen movements lower here, and now we do have to sort of look ahead to the next event risk, which is coming with the NVIDIA earnings report that will be released after the bell on Wednesday. So that would be after the market closes tomorrow. Currently, as things stand, the market is really looking at some very, sort of elevated expectations here for NVIDIA's quarterly performances. There are sort of a lot of ways to fail. I mean, there's going to be a lot of different points in this earnings report. Not just the revenue and EPS figure. We'll also be looking at guidance. We'll also be looking at what the scheduling looks like as far as, these Blackwell chips that have been delayed. So there's a lot on the table here, and there are many different places for the company to miss in some direction. I mean, it just seems a little bit hard to believe that they're going to surpass expectations in every one of these directions. I mean, it's possible. There's, it's a great company, and they could surprise in every direction. But it's a very high bar that the market is currently setting. So at the moment, I do think that the path of least resistance is to the downside. If we take a look at the indicator readings for Broadcom, we can see that currently the share price itself is still being governed by this negative momentum reading. So if we pull out to the daily, this is the 4-hour price chart. If we're looking at the 4-hour RSI here, we can see that this price movement into 185 did create a negative momentum condition in the RSI itself, and this negative condition still has not sort of resolved itself just yet. We are seeing a bit of near-term positive price movement here. We could sort of drill into this chart a bit here. Really, what we're looking at here is the bottom of the price chart. This purple line here is the relative strength index. And as we can see here, there is an uptrend that is starting to emerge here. And then in addition to that, we've seen a near-term test of this area, and we're starting to roll over here to the top side. So we're sort of curling over, to the upside here after testing this region of trendline support. But as things currently stand, there's still some wood to chop here because one, we do need to overcome the RSI's own exponential moving average, which is the yellow line on the bottom of the chart. And then in addition to that, we will also need to break through this descending trend line that is showing on the relative strength index as well. So we are starting to see some emerging positives here, is basically what I'm getting at. But the overall picture is still negative. So that we would need to see some continued upside here, some continued upside price movements, and some further bullish activity within the relative strength index itself in order to suggest that this prior downtrend momentum has completed itself, exhausted itself, and is no longer the primary influence for the stock. So as things currently stand, we are starting to see a bit of a price movement lower. This is not, in my view, this is not surprising at all. I think it would be expected to see investors or the broader market start to take some money off the table, given the fact that we do have this major earnings report coming up on Wednesday. What this really means is that these people are just not interested in holding their positions into those numbers. You can definitely make a case for doing that. You can make a case on both sides, I suppose. If you're a more aggressive trader and you're expecting to see a strong number from NVIDIA, then by all means, you would want to buy the stock. But if you're looking to sort of reduce risk and step aside while the volatility is occurring and things like that, it's not surprising at all to see investors start to pull their money out of the market. So, what we're seeing overall here in the trend and the trading volumes is a bit of a declining condition. So this does seem to be what's occurring at the moment. I think people are just sort of taking money off the table and waiting to see what happens here on Wednesday. So here's the current market update for Broadcom Incorporated, stock ticker AVGO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.